What do you see that is similar from the 2021 top that is similar to today's market action? What else do you see that is similar from each of these lows on the USDT dominance that is happening right now on the chart? There is so many similarities to these signals that suggest there is a top in the market, but that doesn't mean that the cycle is over. We've been with you now for many, many years here on the channel, looking at the stock markets, the real estate cycle, Bitcoin, and cryptocurrencies, trying to keep the level head about all of us here on the channel for years. This was at the times when the rest of the market, we saw it, 97, 98% of people were extremely fearful at the bottoms in 2022 and 2023 at this bear market low. But this was the time that we were talking about the possibility that the market was going to head up. Now we find ourselves at a particular point in the market. You can see some of the similarities coming out here with potential top signals like we saw in the past. And I've got plenty to get through in today's video. This isn't the end, so I'll just shove that into the first 60 or so seconds. It's not the end, but it's probably time just to be slightly cautious in case of further developments. Hit the like, subscribe to the channel if you're new here. We are starting to crush it again. Lots of people coming in, so don't go anywhere. And make sure you see each of the day's analysis. I know it's long, but if you want TikTok type of analysis, go over to TikTok. This is for people who are interested in following market trends, following the indicators, and following the signals of the market to hopefully make better decisions for their investments. So I've got an agenda for today's video. Market change in trend signals, change in trend. It doesn't mean that it's a top and it dumps, it's a change in trend. And they can be invalidated, but we're just going to keep watching to see how the data comes through, okay? We've done this very, very recently. We did it in October at the higher lows when the market began to break out. When I say market, I'm talking about Bitcoin here. We did it at the top in March. As I said, I'm not trying to call the exact day. I'm not a top caller. I'm not a bottom caller. I'm looking for changes in trend to hopefully position myself better in the market. Positioning means putting money in or taking money out. So looking for the change in trend. We did it in March. We did it on the breakout in October of 2023. Remember all the way back here, you had those professional, pro-verified traders who were shorting Bitcoin all the way up. They were shorting Bitcoin at the last top, and now we're at $88,000. That's the sort of shit you want to avoid at this stage of the market, okay? And then we're also talking about it at the lows. As I said, not calling the exact prices. I'm not saying I told you to buy at 15.5K. All I said was I'm looking at buying in this zone between $15,000 and $25,000. So, trying to put a little bit of emphasis here on particular bar patterns that we see playing out time and time again. So with that in mind, we've got a nice, decent agenda to get through here. So let's kick it off with the market sentiment, bring a little bit more life into it because, as I said, the bull market is not over, as I'll tell you in just a moment. The market sentiment, psychology of a market cycle. Maybe you've seen this, maybe you haven't. Wall Street cheat sheet. You've got to ask yourself, where do you think we are in this stage? Unlikely we're here. Guys who've been following, you know that I was looking at the low being here and other people were thinking it was that and it was going down. Now, I think in a short-term perspective, possibly somewhere in one of these three here. No, more like euphoria or thrill. Belief, I think that's past here. We're at thrill or euphoria. Maybe people think this is the belief at the top and they're trying to get fully invested at a peak and then corrects against them and the price action plays out from there. But nonetheless, look, I think in the short term, we're something like that, euphoria, thrill, and belief. And I'll show you why just based on a couple of the next things. The search volume, the fear and greed, okay? Search volume is ridiculous, 71. It was only a couple of weeks ago that we were barely holding a low here. And we said it on the channel, like we're looking at a bottom forming. Like you can see it just sort of bouncing around these lows here. And then it started to break. You had 22, 37 last week. And now this week, this new week, 71. This is the highest. Can you get it? There you can see it. This is the highest we have been since 2021. Okay, last time we got there in 2021, you had a peak and then a correction. So it wasn't over. January wasn't over. You still had 4 months until April, and you still had 11 months until the final peak. So yeah, I don't think it's over. We're just getting some of these first signs. If you're looking at a bigger term perspective, and this might be a bit difficult for new guys, with a total, say, Bitcoin or crypto cycle, maybe it's 3 years up, 1 year down, roughly speaking. We're 2 years up now. We are dead on 2 years up. Therefore, we might have roughly 12 months left, so 1 year up. There is less time now to go up than there is to go down. Just based on historic patterns, things can change. We'll follow that later. But for now, if we're just using what we have over the last 15 or so years, you'd have to say that we are well past the halfway point of the bull market. But for a lot of new people, which is unfortunate, if you are joining, definitely hit the subscribe button on the channel. This is past the halfway point, just so you have a reference point in mind based on the bull market cycle. So in terms of the extreme, the search volume here for Bitcoin, you can see up here, Bitcoin, it's worldwide, it's 5 years. We're getting pretty close to those tops there. Do note that this can go past these tops and create a higher search volume. So it could be the highest search volume we see, which will then drop these down. So this is all relative to the amount of search volume that you've seen historically speaking. So that can change, as it has done in the 12-month period. Okay, so this was the 100% and is now dropped to roughly 75%. And here, we're now hitting 100. So all of the search volume that's come out this week is a new level of search over the last 12 months. So this is the most Bitcoin has been searched over the last 12 months. The next thing on our agenda list was the fear and greed. Fear and greed is at 84. We're hitting the 80s again, extreme greed. Look at that just start to rocket up there. So we had 80 and then we had 84. What we have also talked about in terms of the analysis is that the greed, extreme greed, can remain elevated for sustained periods of time, like it did in the previous cycle. There's one period there, November, December, January, February, and then the corrections. However, it was a very wild correction. So when I say that the bull markets are the most difficult to trade, it's because of the emotions and the extreme volatility. You can look just at those few days. Bitcoin went down, it dumped to 40. So roughly kind of neutral, but it might have got into that just fear, but not extreme fear, and then quickly bounced all the way back. And so that happened all within that sort of 3 to 4 month period. That could be something that we're building to now, which doesn't mean that the price of Bitcoin collapses. It just means it corrects. It corrects fast, it corrects hard, it could correct 20, 30% quite quickly. That's pretty much what has happened in the past. That's kind of what you would come to expect when you get these big moves up. So the search volume suggesting that we're getting to some sort of point like that, some sort of overheated move. The market sentiment, I mean, that is a little bit more subjective. We looked at this, so that's going to come down to you. But I've definitely showed it here with the search volume. The fear and greed is at those levels. Now for the Bitcoin ETF flows, we saw the largest flows in history on the 7th, and then a massive inflow here on the 11th as well. So 12.6, which is very similar to the June peak, and then many of the peaks that came in January, short-term peak in February, and then the final peak there in March before you had an 8-month, roughly speaking, consolidation period. Now we're into this big move to the upside. So massive day, biggest day in history, and then another extremely high volume day, just beat out the 30th of October. So what were the dates? What do they look like? There is the 11th, massive move up, and the 7th is right here. So this little short-term move. Okay, you can see the market went up and then it paused. In terms of where we are, you always got to look at relatively speaking, right? The last couple of days, big move, and that was able to pause the market, right? 1, 2, 3 days, so 72 hours of pause price action. You know, it's not going anywhere. Is enough to make people get a little bit concerned with their positions if they're just getting in. Then it was able to break out, and we had another massive day here just in the last 24 hours. So that is the ETFs. Maybe we got a little bit of a short term. That's all we're looking at it when it comes to ETFs. Now, the 3-day rule has not signaled, so I think everyone can see that. We're looking for the 3 days. That would be pretty severe. I don't want to see that sort of signal. It'll be lower highs, lower lows, not red days. Okay, it's lower highs, lower lows. They can be green days, just looking at the highs and the lows of the bar. Or if you like candles, highs and lows of the candle need to be lower highs, lower lows, 3 days in a row. Nothing to interrupt it, no up days in between. So that's not signaled yet. We can come back to that. And number 6, 7 to 10 day rule. This is a really important rule, fantastic one that Gann found. Mr. Gann, It's a real person. He did this before computers, maybe even before calculators, whenever they were invented. He did this a long time ago, before you had electronic charts, hand drawing, going over hundreds, if not thousands of charts to find these rules. And they have worked for over 100 years. So pay attention to them when they come up. You got 8 days. So this is our Gann Swing Pro. So our Gann Swing Indicator, the professional version here on the new indicator. Guys, we have the link here for TIA Premium, the Black Friday sale coming up. And so that is all going to be on sale in a couple of weeks' time, like basically when Black Friday is. Subscribe to the free weekly report and you'll be notified when that comes out, the big sale there. So what I'm looking at here is the 7 to 10 day rule. When markets trend in the same direction, roughly 7 to 10 days in a row, typically there is at least a pause, if not a correction. So it's a nice, easy trading signal to get on board, because normally after those very significant moves, you got people piling in, but then you got a lot of sellers coming in as well. Doesn't mean that that's the exact top. Maybe it goes a little bit higher, as I'll show you in a sec. But yeah, you could basically use that as a trading signal in your trading plan. So it suggests a change in the trend, at least a pause. And it happens in reverse too. You get 7 to 10 days against, or 7 to 10 days with the trend can lead to a reversal. That's just 7 days to the downside, and it caused a reversal in the market. So a massive move back to the other side. And in that case, it wasn't broken again. You didn't see lower prices from that 49K, but different situation at the moment. A couple of other scenarios that this has happened in. I'm just looking at the settings here. So you go down, change this to 7, show up bar count. You can also show the down bar count as well. You can see that at this point, you got 9 days in a row, and then basically the market's topped out at that stage. You have another 11 days to the upside here. The market paused for several days after that, and then this short-term 7, which came out of a low. So that's a different scenario at that point. 7 days here, market paused and corrected. Doesn't look like much right now on the chart, but when you were living through that period, you saw it correct. And through that October, a lot of people thought this was coming all the way back down, breaking the low. So the main idea, or the way to understand this, is what was the market sentiment doing at that time? Market ran up, and people thought it was basically over again when this correction came. So it really did shift the environment. 8 days up from the low, bam. This is exactly what I was talking about here. Slightly higher, but you're looking for long-term trades. It's really not enough for the market to, for you to be getting in and taking profits from that. I think many would agree with it. So basically 8 days to the upside, called the market, and then bam, it slammed down and stayed down for another couple of months. So it might all be sounding a little bit fearful here. Oh, it could be down for a couple of months. Not always the case, So that's a 7 to 10 day rule. It's essentially just showing us that these moves, because they've been extended for so long, they have the power to pause the market. And it doesn't necessarily mean, it needs to crash like in previous instances. You got to look at this in relation to the entire market structure. Look at this one for an example. In February, it basically took 11 days for the market to come back and break those tops. So pause for 11 days. You think of it in relation to the current people getting into the market. And we know that for a fact. This is the highest search volume we've seen in 12 months. Means it's probably the highest amount of money flowing into the markets at these points in time. And therefore 11 days is pretty long for these guys who may have only been here for a few days. If that's you, just know that you might have to wait this thing out just for a few more days. This is investing, this is trading, and sometimes it takes time. Invalidation points. Should this develop into something bigger, then you have to know, shit, things have actually changed and I need to be at least protecting my capital. I need to protect that money. This is a key level underneath these lows in the mid 60s. The next level above that is around the 74K tops. That was the previous top. If price starts to go under those tops and close under there, which is the key point here, then you should probably get worried for the coming weeks. We'll cross that bridge when we come to it. We don't need to worry too much about that. We're just looking at short-term signals here. So that's the big area for any sort of invalidations if this is going to develop into something bigger. It doesn't seem like that at this point because there is nothing to suggest that will happen. Let's continue on. So we've covered 6 major pieces off the agenda here. Now, this is where it starts to get a little bit more detailed if you're new to the game, so stick with me. We have the bar pattern in relation to the structure, and then also a major or minor top. Now, I think what's probably best before I get to these more intricate details is just to look at the broader picture. And in terms of the broader scope, the 18-year cycle, winner's curse phase, we are actually now up in this phase. I posted this early this year, February, so 9-10 months ago, and we were just on the precipice of coming up in this phase where a lot more money is flowing into the system, looking for a peak in the next sort of 12, 18, 24 months, okay? Keep that in mind. But this period is where we're at, and we're going to see major wild swings at this point. The most recent thing I've seen come out to suggest that we're still going in this fashion of higher prices, more money coming in. China plans to slash home buying taxes in fiscal stimulus, basically pumping more money into the system as they have done already. US, which is what the cycle is based on, US has been pumping a lot of money in, more money to come. Now, the second biggest economy in the world, China, is also doing the same thing. Well, they have been doing it for a long time now. We know they put a lot of money in, which is why the Chinese stock market also pumped very heavily. And we have more money coming into the system. They're slashing taxes, which means more money in the people's pocket. So, broadly speaking, still more money coming into the system. And I think we're going to see much, much bigger things in 2025. Years ending in 5. I'll give you a bit of an insight into the roadmap for next year. Roadmap number 4, 2024, has been very, very nice to us. It's been up year. 2023 was an up year. 2022 was a down, and then finished pretty good towards the end of the year. So that actually worked out very, very well. 2021, very different. And 2020, yes, we had a down year. So 1, 2, 3, 4 out of 5. 80% hit rate on the Dow Jones 10-year cycle. I think that's looking pretty good. Let's continue on and see how this progresses. Now, if you are new to this, chill out. We got several years to go, and it doesn't mean that it's going to be straight up. We'll get to that in future videos. And in terms of the 7 to 10-day rule, this doesn't just apply to Bitcoin. This rule also, the 3-day rule, 3 days in a row from significant turning points, it applies to any chart that you can backtest and find that it's useful on. For example, 10 days out of the low, called that top, big correction here. 7 days out of the low, got to another top, called a very significant correction from that point. Now, I could go back and test this through the entire history, but of course the videos often go on too long. So I'll leave that up to you if you want to do that for yourself and find how you can use these signals that have very good or very accurate probabilities for turning points in the market. You can do that for yourself and add it into your own trading so that you can sort of steer clear of the nonsense and the noise that is out in the markets. As you can see, the rules are playing out to a T. The signals are popping up. Now, we've got the long-term stuff to get onto, plus more of the bar patterns. Before I do, shout out to the channel sponsors, SwiftX in Australia, if you're looking for an on-ramp for your monies to get into crypto, and then over to Bybit or Bluffin and CoinCatch there. Heaps of meme coins, altcoins, whatever it is you want to get degenerate on. Links in the video description, plus you'll get those sign-up bonuses as well. Obviously, have your plans in play. I don't suggest just going ballistic with degenerate stuff. So if you do need to set yourself up with some sort of trading plans, TI Premium is the place to go. So the Bitcoin bar pattern and the similarities that we're seeing at the moment compared to the 2021 tops. Now, the signal can come up whenever. It doesn't necessarily have to be at the tops, but it seems to be a little more powerful when it does come in at tops after very significant moves. And this is a very, very significant move. I think it's the largest or second largest week in history. You've got last week being 14-ish, $15,000 week, and this current week is at about $10,000. So pretty big weeks. You have to go back to August. That was another large week, but it was from the low. So the total thing was 13K, and then you had a 13 to 14K week in February 2024. So the largest weeks in very recent history, at least in this bull market as well. So it's also come up and hit the 150%, the price targets that we've been watching for the last several days from this range. So this range that we've been following, low to high to low, broke the 50%, hit the 100 at 81.5K, and then got to this next target of $89,000. Now this particular bar, this one right here, see that volume? Volume is higher than the previous day, but the close was lower and the range was lower. Just think about that logically for a moment. Why is there more volume here? One slight step back. This can go slightly higher, but you've got to keep it all in relation to each other. Are you expecting big moves out of this, or smaller moves, or something that looks like a pause, like we've talked about before? So coming back to the logical side of things here, why is that volume larger than that day, and why is the close lower, and why is the range of the bar, so the total move in the day? There's potential a lot of buying happening, so a lot of new people coming in. We've already proved that with our search volume and the greed, so the Bitcoin search volume in Google and the greed. We've seen it with the ETF flows. So why then are we seeing a lower close? Possibly, the possible reason that I'm giving here is that we're seeing a lot of selling. Short-term selling. What's short-term? Maybe it's days, maybe it's hours. We at least have a signal for now that suggests that things could be changing for the time being. So that bar suggests that we saw a lot of selling coming in to firstly match all the buying, and then secondly to increase to be more than the buying that came in. So we saw a lower close. That's essentially how I would read the bar. Extra volume than the previous day, lower close, and the range was also lower. So a lot of selling came in. Now, if this is a short-term move, you want to see this power away, taking out those tops today and tomorrow. So getting a big move away from it. But I've also talked about how extended this move is with being 8 days. So it can go to 10, sometimes 11 days in a row. So that would give you 9 today, 10 tomorrow, and 11 on Friday. So that's also possible. But in that case, you'd want to see the range of the bar increase again, which would mean that even more buying is coming in than the selling. That's the big key here. So it needs to come in and not overlap the bars. All right. So I think we've got that thing settled now. That's part of this particular short-term move here. Now, if that's the we looked at that. So how does that compare to 2021? So the big question that I've been posing to you as well. Well, let's have a look again at 2021. You can see what happened there. That is exactly what happened. I had the arrow there pointing to the volume, higher volume than the previous day. It was a smaller range than the previous day. You had a massive previous day pushing higher than the all-time high, the previous all-time high. So why didn't that next day keep going if there was that much strength in it? The market sentiment at the time was that Bitcoin was going to $80,000, and it was at 61 for that whole period. That was the peak. Finally broke to 63 and only barely got to just short of 65. So we call that the 65K top. So why didn't it push through the next day? Well, because there was more selling than buying. You can see the next day was lower volume and the buying did not step in. It didn't support the thesis that the market was going to, well, the narrative that the market was going to go to 80 grand relatively quickly. So then what happened? Well, it didn't happen quick enough and it started to fall. 1 day down, 2 days down, 3 days, you got the collapse there. So we go back to this. Hello, 3-day rule. 3-day rule comes in, which suggests that probably going to see a short-term top for at least a short period of time, which then can develop into a longer period of time, which, surprise, surprise, it did. It developed into a very long time with a very significant drop of 53.5%. Call it 54 if you like your round numbers. Okay, so then that lasted for about 6 months underneath that top. You only barely got a new all-time high and then a collapse, and that was it. Game was over from that point. So the bright news is, or the beauty about this is, we haven't seen any 3 days down yet. We still have a lot more time, and I'll get to those charts in just a sec. We still have more time, I think, left in this cycle based on the macro stuff that I've just shown you. So even if we did get the 3 days down, the worst case scenario, the big 3-day signal that ends trends for a considerable amount of time normally, I think we still have further to go to the upside. The next thing to look at is the lower top forming. And right here in May, I did a few live streams on other channels. They were still calling for 80 to 100K, but that was a very, very clear signal that we did not get back above $60,500. Now I'm getting very granular so you can get a reading of the market, how to basically read the language. It didn't get it back above that top, which told me that it's probably going to go down from that point, and down it did go. So that is a very clear, exact signal that happened in 2021. Basically, exactly the same in terms of the bar pattern and what followed after that point. Now, we haven't seen a couple of those, as I said, so let's not worry too much just yet. You can see just each of these times, it's slightly different pattern, big push up, and then the next day just reversed. Why isn't it going higher? Because you're seeing a lot of selling come into the market and it rolled over. So we're very, very early days. That's like looking at the chart like this. How do you know what's coming next? You don't know for sure, but there are some signs that are saying maybe it's slowing down. That's all. See, it's going higher just, but then slowing down, coming back underneath. It's going higher just, and then coming back underneath slower. So every time this switches, people are like, you're flip-flopping. It's going backwards and forwards. What do you just make your mind up? Well, the market hasn't made its mind up yet. It's trying to make its mind up, and then it basically confirms it here on the breakdown, and then here on the next breakdown of this low, and then here on the lower top, and then here on the breakdown. So it gives you like one, if you're really tuned in, 1, 2, 3, 4, 5, 6. It was like 6 signals that this was getting weak here, but it happened over the course of 1 month. Okay, so that's the difficulty now that we face moving forward. People really don't have the patience. They want to know today if the market is absolutely topping and it's game over, or if it's game on and they have to pile everything in onto the first dip and it's going to bounce from this point. The market's a little bit more intricate than that, but it's not really overly difficult. Now, this was the other chart that I showed you in the intro. That has shown every Bitcoin all-time high and every Bitcoin significant intermediate top throughout its history going back to 2018. So 6 years now. Now, this could be broken this cycle. I happen to think it might be broken. It hasn't done it yet, but we're onto that now. If this breaks here, well, then Bitcoin is going higher. Like this is just going to break out and burst to the upside, okay? And we have our next target of 96K. So each of these price levels based on the extension to the upside. Long term, very, very bullish. Short term, I'm just looking at some of these signs that say things might be overbought. The USDT dominance has hit a support line. As I said, we haven't got any final confirmation yet, but I'm definitely paying attention to that. The total cryptocurrency market cap also at resistance. There is your monthly swing top. There is your March, April top. And now we've also seen another top here at around 640. So it's coming up to the next tipping point rather quickly. The first one has been overcome. We've got the 50% level at 580 and then the tipping point at 640, 650, up to these peaks here at around 670, 680. So basically mid $600 billion to get to that next point. We have weeks to go. We're still fine. If this doesn't happen now, I think it's still going to happen. But I'm just looking for these periods. And the reason why I bring it up is because I think a lot of people might be selling too much too soon. Yesterday's video I did talk about selling a little bit, and someone wrote a really good point. It's to basically prove it to yourself that you can sell in the market. Prove it to yourself. Maybe sell 2%. I don't know. Whatever it is you want to sell. Because what happens at when the market starts going up even faster, majority of people don't sell, the market comes down. They don't sell typically because of the psychology. It's like a deer in headlights, or like we like to say here in Australia, a kangaroo in the headlights. They're blindsided. They think it's just going to keep going up forever, and they don't sell. So if you want to test it, now is a reasonable time because it has reasonable signals to be saying that maybe there is a short-term top here. As I said, small positions just to test it to yourself so that you know you have that muscle reflex to click the sell button. It's pretty tough. Okay, longer term again, Michael's Elliott wave count, bang on track. Long-term stuff, we're still looking for upside here. Fifth and final leg is well and truly on. Eric's short-term pullback signal here, just looking at some of the crossovers in his stochastics, a lot of stuff that I don't use, but I like to see other people's analysis basically coming to the same reasoning. using different means. If their reasoning came to, if they're using different reasoning and it came to different scenarios, that would be also interesting and something to look at. But yeah, it's nice to see different things also coming to a similar sort of conclusion here for the short term. The short-term time, or the long-term timeframes, are still, I'm looking out to somewhere in 2025. I know the video's gone on quite long, but just to end it on a bit of a positive note, longer to go, but corrections do happen. Like you can see back here, that was a January correction. Very, very solid correction for BTC. Just to have a look at it, in terms of a percentage move to the downside and time, which is pretty important. You see there, 31.5%, 2 weeks to the downside. Then there was 1 month until it broke that top again. 1 month. Can you imagine people waiting a month after they've just put their life savings into a market and hoping they're going to be rich tomorrow? It's a long time, very, very long time. So there you have it, the Bitcoin market change in trend signals, very similar to what we saw in 2021, and a lot of tops throughout the bull market and the bear market. And we've also seen the signals in the S&P 500 as well. Hit the like button, subscribe to the channel, don't go anywhere. It's your home of macro cycle analysis. Plenty more coming up for you over the next couple of days. Let's see if this continues to play out or what happens next, of course. And yeah, I'll see you guys back here at the next video. Until then, take care and peace out.